Okay, now remember that we already established that the International Financial Reporting Standard IFRS we established that it is a principle-based regulations, which means that it contains merely principles, just principles. You see, this conceptual framework, what we want to learn from here is that the principles that is used to develop this IFRS are this conceptual framework. You see, IFRS are principle-based regulation, meaning that they are developed using principles. Those principles that is used in developing this IFRS is the conceptual framework. And that's how we can define it. We can define the conceptual framework. We can say the conceptual framework are the principles the principles that guides the development of IFRS. That's the conceptual framework. You need to always remember that the IFRS are principles, they are principle based. So they are developed from a set of principles. Those set of principles are the conceptual framework. So we are not even going to IFRS or IAS now. Where we are starting from is let's even learn those principles that is used in developing this IFRS or IAS. Okay, lest I forget, I think I mentioned it last week. Is there any difference between IFRS and IAS? Or are they, what's the difference? Okay, that's correct. So if that question comes up again, as it is today, they are the same thing. Okay? They mean the same. Just that now every new standard we issue, we call them IFRS. And if we are amending any existing IAS, we don't continue holding on to that IAS. We call them what? IFRS. So we explain that. I just want to take care of that. Again, back to conceptual framework. What we want to learn today is, okay, what are these principles? Not rules. Conceptual framework has nothing to do with rules because we are speaking of IFRS here, which is a principle-based framework. So we want to learn what are those principles that underpin, that guides the development of this IFRS. That's what we want to learn here today. So you will see some people now, they will then say that if that's the case, if conceptual framework are the principle that is used to develop IFRS, some people say then conceptual framework is like the foundation of reporting itself. Like it is the foundation of reporting, is what we rely on. Some people can even see it like a blueprint, right? It's just like when you want to build a house and you have an architectural drawing. Okay, that architectural drawing, you go ahead and use it to build a house. If you use it to build 5 houses, they will have similar structure, right? So conceptual framework is one of the reasons why standards or IFRS, you see them having similar structure, which you are going to see as we move on in this class. Before I go into these principles, let me quickly address number one. From here, what could be the benefits or advantages of having some set of principles to develop IFRS? Because the alternative to this is that instead of having some set of principles that we use to develop IFRS, why don't we just develop every IFRS from scratch? At every point we want to develop an IFRS, just Why do you have set of principles that you then use as a guide to develop IFRS? What could be the possible advantages of that? Number one, advantages is something I will call standardization. Standardization. When you have set of principles that helps in developing this IFRS, it fosters, it promotes standardization. What this means is that the process of developing IFRS becomes standardized and coherent. Since we have some set of principles, so we are not starting from the scratch at every point in time. We know exactly what we want to do. And standardization will also mean that every standard will have a similar structure like that. Standardization. That is an advantage. Another advantage that we can have with having a set of principles used in developing IFRS, let me call this common ideology. Let me call the second one common ideology. And what this common ideology means is that users or outsiders that know that we use or we have some set of principles that we use in develop IFRS, they will understand that financial reporting is based on a common ideology. They will understand that we don't just, reporting is not just anyhow, it's not operating in isolation. We have a common, everything is based on a common base, which is the conceptual framework. We have a common ideology, which makes sense. So they will understand, users will understand that reporting is based on a common ideology. Number three, let's call that political interference. Political interference. What do I mean by this? It means that in developing standards on any transactions or events, there won't be political interference. Like Nigeria now, we want to do GDP rebase. We want to rebase our GDP. I mean, that's the discussion right now. If you check most what analysts actually are speaking about, and when they complete this rebasing, what will happen to our GDP? You know, it's going to expand. It will be bigger to a large extent. Probably it will then go back to maybe over $300 billion or maybe $400 billion, depending as against the a little above $200 that we have right now. But the point I'm trying to make is this: when this GDP rebasing is done, this government will look good, right? That okay, our GDP has expanded under our watch, right? So the same thing, similar to GDP, is reporting. See, the way companies report for items, assets, and liabilities have serious impacts on the total economic performance of that nation. I mean, if, for example, the government knows that if companies measure their maybe financial assets or their PPE at fair value, they know that it makes their net assets bigger, right? Which ultimately will make the entire market capitalization of that country bigger. And that means the government can interfere in the process of developing standard and say, okay, why don't you allow companies to measure their assets at fair value like that? But since we have principles, if they should tell us that, say, no, that's not how it operates. We have ways of measuring these things. We have options and all that. So with having an established set of principles, then it prevents what? Prevent political interference. Another one is, let me call this unusual transactions. Unusual transactions. Let me call this unusual transactions. There are some transactions that we have not seen before, that they are new to the economic environment, and we might not know how to treat them, which means that there is no standard or IFRS that addresses those transactions or items. But because we have an established ideology, an established set of principles, then we can go back to that one on how to treat those unusual transactions. So again, the conceptual framework can help us in the treatment of what? Unusual transactions. It is an advantage. Then, what could be the possible disadvantages of this conceptual framework? Because there is nothing that has an advantage. It will definitely have a disadvantage. It definitely does, except if they don't want to be realistic. So, what would be the possible disadvantages of this conceptual framework? What could be a disadvantage of having an established principle that we follow when developing an accounting standard? What could be the disadvantage to that? Can you think of any? Having an established principle that we use to develop IFRS. Number one could be, there are varieties of users. When I say users, I mean companies or countries that use this IFRS. And they have varieties of needs. Okay? Because there are variety of users, variety of needs. Can a set of principles meet all the variety of needs that can possible or that can possibly exist? Is it possible? It might be possible, it might not be possible, but it's something to think about. It's a possible disadvantage. So, um, can the conceptual framework can the conceptual framework meet the needs of varieties of users? So it might not meet all their needs. It's possible. Another disadvantage could be that, what other disadvantages can we have when you have a set of principles? Anyone that we can think about? Having one principle. Okay, let me give you another one then. If you look at this standardization, having standardization, to a large extent, having this advantage should make developing IFRS easier. Abi? It should make it easier. But remember, I gave you 4 steps in developing standards. With or without conceptual framework, we are still going to go through those steps. So, well, we could take in that as a disadvantage, that this conceptual framework might not make the effort of developing IFRS any easier. Okay? So the conceptual framework might not make the effort of developing IFRS any easier. Okay, why I'm actually giving you this is that it's something they can ask us. They have asked it before for 6 marks. Yeah, advantages and disadvantages of conceptual framework. I don't joke with these kind of things in an FR exam, because if you don't pick 3, 6, and 5 points here, you sweat. Yeah, you sweat in those other areas where they are asking you the core measurement, and you sweat. But all these ones, you pick your points like that, then I mean you're getting close to where you are supposed to pass. So please, very important. I've not said much. I've given you a very simple definition and introduction to conceptual framework. It's nothing beyond set of principles that guides the development of IFRS. Very straightforward. So meaning that it is the conceptual framework that they use to develop IFRS. And from there, we could pick up some advantages and disadvantages. Is there any advantage you might want to add? Yeah. Okay. Okay. If you have set of principles already, does it become, is it the reason why it is time wasting? Yeah. But that is not the fault of the conceptual framework. Yeah. That will not be the fault of the conceptual framework. So let me think along your line. So having a set of principles, me, I'm thinking in the line of how should I even put it? Maybe the work might be bulky or something like that. So bulky in the sense that since there's principle already, meaning that you need to touch on those everything. By the time we learn those principles, you will see is a lot that they need to consider when developing. So it could make it a little heavier and bulky, right? So not like that. So which is this one anyway, it might not make it any easier. Okay, that's that. Now, before I go into these principles, another thing that you can learn, that you can earn cheap marks from in the exam is the purpose or purposes of the conceptual framework. Cheap marks in the exam. That's if they ask you, what's the purpose of the conceptual framework? When we say purpose, then we are talking about what it is used for. Abi? So if you want to remember this, just identify the people that use it. So whatever they are using it for becomes the purpose. And the first set of people that will come to mind is the IASB. So what would they use the conceptual framework for? To develop or amend what? IFRS. That's their work. That's what they do. What can they use it for again? The IASB. They can also use it to harmonize accounting regulations. The IASB can use the conceptual framework to harmonize accounting regulations. Don't forget, one of the objectives of the IFRS Foundation is to harmonize international standards and national standards, to harmonize it. So conceptual framework can help to do that. Okay? And the way it can help to do that is that if a country decides not to adopt IFRS, decides not to use IFRS, they can just lure them into using or adopting conceptual framework to develop their own standard too. If they are using this same conceptual framework to develop their standard, that means whatever standard they develop will be similar to the IFRS. So it can help them in their harmonization goals. Another one, let's look at the preparers. The preparers of financial statements, they can also use this conceptual framework. And what can the preparers use it for? Number one, they can use it to prepare their financial statements. They can use it to prepare their financial statements. And number two, the preparers can use it to develop consistent. They can use it to develop consistent accounting policies. You can use it to develop consistent accounting policies. This second point, to develop consistent accounting policy, I will teach you a standard called IAS 8 on accounting policy. There you will learn that every item in the financial statement has an accounting policy. And this accounting policy are usually developed from an IFRS, right? So when we have a situation where there is an item or a transaction that does not have an IFRS, and this preparer need to develop accounting policy, they use the conceptual framework to develop those consistent accounting policy. And yeah, preparers management, like these are majorly companies. Preparers, good question. Yes, companies develop accounting policy. Every company must have. We don't just. I mean, it's just that a lot of people are not doing it the right way. If you are the accountant in your company, you have to have a set of accounting policy. So we find a situation whereby is when the auditor come and they want to prepare audited report. That's how is mostly done. They will just copy and paste one set of accounting policy from somewhere and come and dump it in your report, which is very wrong. Yes, they are developed from the IFRS. They are developed from the IFRS, and it's important that you have it already. That is already in existence. Because, for example, now when you have assets and you need to recognize those assets in your books, you need to, one of your accounting policies that are you using a cost model? Are you using a revaluation model? Right? Because if you are using a revaluation or fair value model, that means you will not have to, you might not depreciate the asset. So your policy already, you have already chosen that policy, right? So if you don't do that, it becomes a problem. Another one is a situation of, okay, even if you want to depreciate this asset, which method of depreciation are you going to use? Are you using straight line method? Or are you using reducing balance method? All of these are from the IFRS, but IFRS is principle based. It will not tell you exactly what you need to do. You are the one that will make a choice. That choice of what you want to do is accounting policy. That you know, okay, this is how I want to treat this item. This is how I want to. So it's very important in any organization that on all the items you have, you understand fully your accounting policy, because that is exactly how you are going to recognize and measure each of those items in the financial statement. So, I mean, last two diet it was there. I can't ask accounting policy back to back, because we see that a lot of companies don't even. You're an accountant in a company, you don't even know what an accounting policy is. Let's shall be recording it. You're just recording on no basis like that. But you can change that narratives, guys, and make companies do the right thing. No, no, you don't. IS 8 talks about consistent. I mean, behind every accounting policy, you will see us mentioning consistent. You don't change accounting policies. As soon as you choose an accounting policy, I mean, yeah, comparability is extremely important. You don't change. No, don't do that. No, don't do that. You cannot. Okay, so there are only two reasons you can change according to IS 8. Two. Number one is if there is a change in IFRS. If that change is required by an IFRS, or if that change will result in a more reliable presentation of your financial statement, meaning the structure of your entity has changed in such a way that if you continue to present that way, it becomes a problem. And a typical example we give is that if you have, for example, an investment property, right? An investment property that you were using as your office. You have a building, you were using it as your office, meaning that at that point you put it in your books as PPE, and you were depreciating it like that. But later you then move your location to another place. So that place you were calling PPE that you were using as your office, you let it out. Then that asset becomes an investment property. So on that basis now, the valuation method has to change. It has to change because you don't have any choice. So because investment property now has to be measured at fair value. So there will be a change in policy because that will result in a reliable presentation. So that is the way it works is exactly the way I'm telling you. So you don't just change accounting policy. You don't say, okay, I want to change from no. A good auditor will write it back. We would desire would recognize those things you have done, bring it back to what you were doing, and if you refuse, it will give you a qualified opinion like that. So it's not allowed in reporting. So we're just starting. These are just introduction. We're still going to look at all of these standards as we move on. Now, the users, I'm talking about the investors and whatever. So what do they use it for? To interpret and understand so users use it to interpret and understand the financial statements. They use the conceptual framework to do that. Another set of people are the auditors. The auditors. The auditors use it to form an opinion on the financial statements. The auditors use it to form an opinion on the financial statement. Is you are supposed to change it. You are supposed to be checking it as an accountant. Okay. So and ensure you update it regularly. If you don't do that, when your auditors come, that's why it's good to have good auditors. When your auditors come, those are part of the things the auditors check in their audit procedures. Is already there the adequacy of an accounting policy. They will look at it vis-a-vis the nature and substance of your assets and items and all of that. So they will check it. So that's what auditors usually come up to do. But you have the first responsibility to develop the right accounting policy, the accountant. Let me give you one more. The IFRS Interpretation Committee, they also use the conceptual framework to develop interpretations. They use the conceptual framework to develop interpretations on IFRS. They use the conceptual framework to develop interpretations on IFRS. Okay, now let's move to stage 2. of this topic. We have established the background here. We know, I want to believe everybody here knows what we mean by conceptual framework, which are the principles that are used to develop IFRS. You should be able to study the advantages and disadvantages of this conceptual framework. And you need to be able to correctly articulate the purpose of this conceptual framework. These are very important. These are potential 10 marks, 7 marks, 6 marks in the exam. You don't want to joke with it. Now, having mentioned that, now let's now go to the principles themselves. We said conceptual framework are the set of principles. Abi, what are those principles? Let us go there. What are those principles? Now, while I'm cleaning the board, you see, this conceptual framework we are looking at was the development was completed in 2018. The development of this conceptual framework that I want to explain to you was developed in 2018, which means that there was one we were using before, that of 2010. They updated and scrapped that one. They updated it to this one of what? 2018. So have it in mind that this is the 2018 conceptual framework. And with the 2018 conceptual framework, it came in and introduced 8 chapters, right? They arranged those principles into 8 chapters. So let me call it the content of the conceptual framework. Yes. So they arrange it into chapters. Chapter 1, they call that the objectives of the objective of a general purpose financial report. Objectives of a general purpose financial report. Chapter 2, they call that qualitative characteristics of a financial report. Qualitative characteristics of a financial report. Chapter 3, financial statements and the reporting entity. Chapter 4, elements. Element of financial statement. Chapter 5, recognition and the recognition. Chapter 6, measurements. Chapter 7, presentation, and disclosures. Chapter 8, concept of capital and capital maintenance. Okay, continue from here.